A very good morning, students. Our session of Business Management 3. Now, in our previous session, we have already completed our unit number 3. So, today onwards, we'll start the new and last unit of our particular subject, that is Business Management, and the name of the unit is Modern Banking System, or we can say that only modern banking. It is really very interesting unit because many terms you all are aware about the banking system, the banking facilities, or the banking services which is provided by banks. So let's move towards the syllabus point. In this particular unit, we are going to learn the introduction to modern banking or simple banking. Then after, need and importance of banking facilities. Then after, types of accounts. Then after, types of accounts holders. Then after, passbook and checkbooks and other forms used in banks. Then after, brief concept of DD, that is demand draft, banker's check, promissory notes and bills and franking. Then after, banking transactions, that is RTGS, NEFT, IMPES, UPI and USDD. Then after, ATM and money transfer. And the last one, that is mobile banking. Now, out of this whole syllabus of unit number 4, I'm damn sure that you all are aware about maximum points of this particular syllabus. So this particular unit is not totally new to you. So now let's start with the introduction part. Yes, banking or banking industry, or we can say that bank. So bank is a place where saver come to save their money, or they want to transfer their saving into investment, and the person who is in the need of money, they come to the bank and borrowed the money for the same. So in a simple term, we can say that bank is a link between a savers and a borrower. Those who have excess, they are going to invest their excess money in bank, and the person who is in the need of money, they are going to borrowed capital from the bank. So bank is a mediator between these two parties. And other than this function, means other than providing loan and other than giving the facilities of different investment opportunities in bank, there are many other functions that banks are performing nowadays. A simple money transfer, a simple fund transfer is possible with the help of banking facilities. Now, if we want to take insurance, then also this facility is available with bank, and that is known as bank assurance. Means there is an amalgamation between bank and insurance company. So both the company provide banking facilities plus the facility of insurance to the common people. So that is possible with the help of bank. Then after, if we want to invest in a capital market, if we want to invest in mutual funds, then again bank is there to give this kind of facilities. In any commercial bank, in any private bank, in any foreign bank, or we can say that scheduled or non-scheduled bank, we are able to open a demat account, that is dematerialized account with bank. And with the help of this demat account, an individual is able to invest in capital market through the platform of this bank. So now in modern era, there are so many functions of bank that they are performing in a proper manner, and as an individual or as a corporate, we are getting the maximum facilities of this different functions of bank. Nowadays, there is no single transaction in which we do not require bank. So, if we want to purchase any item or any material online, then again a credit card facility is provided by bank. Bank is provide the facility of net banking. If I want to transfer money to my friend, then with the help of mobile, with the help of bank application, it is possible with just a single click. So it is an endless discussion of the banking functions or banking facilities that is provided by each and every bank. So now let's discuss the introduction part which is given over here. The modern banking industry is a network of financial institutions licensed by the state of supply banking services. The principal services offered related to storing, transferring, extending credit against, or managing the risk associated with holding various forms of wealth. The prescribed bundle of financial services offered at any given time has varied considerably across institutions, across time, and across jurisdictions, evolving in step with changes in the regulations of the industry, the development of economy, and advance in information and communication technology. Yes, with the help of banking facility, there is a boost up in country's economy. There is an improvement in the information and communication technology. So that is only possible with the help of banking facilities. Banks. as financial intermediary are party to a transfer of funds from the ultimate saver to the ultimate user of funds. Often banks usually alert the terms of the contractual agreement as the funds move through the transfer process in a manner that supports and promotes economic activity by issuing tradable claims. Tradable claims, that is the negotiable instrument which can easily purchased or sell in open market by anyone against itself. The bank can add a flexibility to the circulating media of exchange in a manner that enhanced the performance of the payments system. These deposits may support the extension of personal credit to consumer. Yes, as we all know that credit facility is provided by banks, or short-term credit to non-financial business. If so, the bank aids the management of liquidity, thus promoting household consumption and commerce. So this is the introduction and the history of banking facilities. As we all know that how bank work and how bank enhance their functions to help our routine activity or our commercial activity. So it is my humble request to all of you that if you are going to write in your exam, that is the introduction part of bank, then do write in your own words that how banks are helpful to the society, how the bank is helpful to the economy. So that introduction is in your mind. So no need to mug up such introduction or the basic meaning of bank. So now let's move further. The definition. Again, a simple definition is there. Modern banking systems, also known as e-banking system, is a Windows access, full point and click, on-premise provider offering core data processing solution. As we all know that now we are not supposed to visit the bank personally, that if you want to do some transaction of money transfer or if any capital requirement is there, so now this facility is available with only a single click. Item capture, imaging solutions and management information system, MIS. So now banking facility or banking services is only within a single click and we are able to get the same facility at our place. So that is one of the biggest advantages of this e-banking or modern banking system. The next point is very important, that is need and importance of banking facilities. As we all know that there are many functions or there are many roles that bank plays to facilitate the services to individual or for the commercial activities. There are few important points that I include in this particular point of our syllabus. So now let's discuss one by one. The commercial bank play a critical role in the economy and the financial system of any country. The banks are crucial when it comes to saving and moving money. It facilitates the movement of money between various parties. Yes, the main task of bank is the distribution of the whole capital or whole money between different parties. One of the main importance of bank that it remove the blockage of money. So with the help of banking facility, there is a smooth flow of money in any country's economy. Now the first importance or need is accepting deposits. Yes, the main role of bank, they are accepting deposits from anyone. If you are an individual, if you are a salarized person, if you are a corporate body, then if you have access with you, then definitely bank will accept your deposits. So now let's read it. One of the primary role of the bank is accepting deposits. This is one of the standard services in the banking sector. Now it is the basic role of any bank. If we are talking about the local bank or if we are talking about the foreign bank, the primary role or primary task of bank is to accept the different kinds of deposits. Some of the examples of the deposits that are made to the bank includes the saving deposits, fixed deposits, current deposits and recurring deposits. So there are 4 types of deposits that bank is going to accept from us. Then after second one, the saving deposit. Bank also help their customers to save through the saving account. The savings of the customers are critical because these are some of the things that put the bank afloat. The saving account is suitable for the salarized individual and people who earn on a regular basis. The interest rate on the saving account is typically low. Saving deposit is nothing but it is known as our saving account. Then after the third one, that is fixed deposit, that is known as FD. When you want to transfer your saving into investment, then bank gives the facility of FD to the customers, and on FD bank give some handsome interest rate, and through this interest rate we are able to enhance our savings into investment. Banks also offer the fixed deposits to its customers. For fixed deposits, the customers are not allowed to withdraw their cash until the end of a given period. As we all know that fixed deposit is for a certain period of time. Maybe it is for 3 months, it is for 6 months, or for 5 years, or for 6 years. It is depend upon the customer's choice. The fixed deposit accounts usually have a higher rate as compared to the other types of accounts. The withdrawals are strictly prohibited in these accounts until the end of the maturity period. Yes, before maturity, we are not able to withdraw our money. And if there is an emergency of withdrawal, then we are going to forego the interest on our fixed deposits. Then after fourth one, that is remittance facilities. Yes, remittance facilities are totally related with the service facility that each and every bank offers on their premises. So another essential functions of the bank is that it offers remittance services. Services like the mail transfer, sending online remittance, the issue of the demand draft, or so on. So this is the essential services which is also provided by bank. Then after the fifth one is loans and advances. Giving loan and advances is another vital role that is played by the bank. The banks issue loans to the deserving customers and charge them with a higher interest. In fact, when we consider how banks make money, most of them are usually through the loans and advances. Yes, loans and advances are the main earning of any bank. And by providing this facility, that is by providing loan and advances, the bank is going to earn. So this is the main source of bank's earning. And as we all know that there are different kinds of loans available at bank. Then after sixth one, that is overdraft. Sometimes the bank provides overdraft facilities to its customers through which they are allowed to withdraw more than their deposits. Yes, when a customer is able to withdraw beyond their limit, so that facility is known as overdraft facility. And generally this overdraft facility is provided to the commercial people or to the corporates, and that is for their business purpose. The seventh one, that is cheque payment. Yes, as we all know that through cheque, by issuing cheque, we are able to pay, and by accepting the cheque from the another person, we are able to deposit in our bank account. So that is one of the easiest form of transferring money from one account to another or from one person to another. Banks provide cheque pads to the account holder. Accounts holder can draw cheque upon the bank to pay money. Banks pay for cheque of customers after formal verifications and official process. Yes, as we all know that there is a legal process of the clearance of the cheque, and if the cheque is going to be passed through this legal process, then automatically the fund is going to be transferred. The eighth one is collection and payment of credit instruments. In modern business, different types of credit instruments such as the bill of exchange, promissory note, checks, etc. are used. Yes, these all are going to study in detail in our next point, that is promissory notes and checks and bills of exchange. banks deal with such instruments? Modern banks collect and pay different types of credit instruments as the representative of the customers. Then after, the ninth one is foreign currency exchange. Banks deal with foreign currencies as the requirement of customers. Bank exchange foreign currency with the local currency. Yes, we are able to convert dollar into rupees, or we are able to convert our rupees into pound. So it is totally based upon the demand of customers, which is essential to settle down the dues in the international trade. Then after, 10th one, that is credit card. Yes, it is really a very famous one. So no further explanation is needed that what is credit card and how we are going to use the same. A credit card is a card that allow their holder to make purchases of goods and services in exchange for the credit card's provider immediately paying for the goods or services. Yes, if we want to purchase something, but if we do not have sufficient physical cash with us, then with the help of this credit card, we are able to purchase any goods or we are able to rendering any services at a time. But after a few days or after prescribed days which is given by bank, we are going to pay to the bank, but we are going to enjoy the facility right now. So this is the main advantages of credit card. And the card holder promising to pay back the amount of the purchase of the card provider over a given period of time and with interest. But nowadays the credit card facility is totally interest free. Yes, banks are going to charge interest on credit card, but it is before 10 to 15 years. But nowadays the credit card facility is totally free. 11th one, ATMs Services. Yes, as we all know that through ATM we are able to withdraw cash and we are able to deposit the same. ATMs replace human bank tellers in performing giving banking functions such as deposits, withdrawal, account inquiries. Now discuss about the key advantages of ATM services. That is 24 hours availability. Second one, elimination of labor cost. And the third one is convenience of location. So these are the basic facilities of ATM. So that's all about the need or importance of banking facilities. Now let's discuss about the types of accounts. Yes, there are different types of accounts and many accounts are known to us. So now let's discuss these types of accounts one by one. The first one is current account. One thing I want to mention that in current account we are able to deposit or we are able to withdraw cash numbers of time. So there is no restriction of the numbers of deposit and the numbers of payment. And generally current account is used for the commercial purpose. Generally business person is going to open the current account for their business transactions. The rate of interest in current account is nominal to nominal. Bank is not going to charge much on current account. So now let's discuss it. A current account is a deposit account for traders, business owners, and entrepreneurs who need to make and receive payments more often than others. Sometimes it is possible that any trader is going to pass with 10 to 15 transactions in a single day. So that is not possible in saving account. So for that purpose, bank provides the facility of current accounts to the traders and the business person. These accounts hold more liquid deposits with no limit on the numbers of transactions per day. Current accounts allow overdraft facility. Yes, in current account, a business person enjoys the facility of overdraft. That is withdrawing more than what is currently available in the account. Also, unlike saving accounts where you earn some interest, then these are zero interest bearing account. As we already discussed, the interest rate in current account is 0. But a person need to maintain a minimum balance to be able to operate current accounts. So, a nominal amount that we need to maintain with the bank to operate the facility of current account. So that's all about the current account. The second one is saving account. Yes, saving account is for the common people, saving account is for the salarized person, or saving account is for the person who are earning monthly or who are earning regularly. And bank also give interest on the saving accounts. A saving bank account is a regular deposit account where you earn a minimum rate of interest. Here, the number of transactions you can make each month is kept. Yes, there is a restriction on the transactions of in saving accounts. Bank offer a variety of saving accounts based on the type of depositor, features of the product, age or purpose of holding the account, and so on. So the facilities of saving account is totally customized. These are regular saving accounts. Saving accounts for children, senior citizen or women. Institutional saving accounts, family saving accounts, and so many more. So that's all about the saving account. The third one is salary account. Yes, as we all know that the salary is going to be deposited directly from the institute to their employees' account. And the minimum balance, there is no requirement to maintain the minimum balance. So, institute is able to open the salary account with a nil balance. That is, they are able to open with 0. Among the different types of bank accounts, the person's salary account is the one that you have opened as per the tie-up between your employer and the bank. Yes, there is a corporate, a mutual communication or a tie-up between the bank and the institute. This is the account where salaries of every employee are credited to at the beginning of per cycle. That is the starting of the month. Employees can pick their type of salary account based on the features they want. The bank, where you have a salary account, also maintain reimbursement accounts. This is where your allowances and reimbursed are credited to. So also they are providing the facility of reimbursement, which is really very necessary for the institutional purpose. Then after, the fourth one is fixed deposit account. To park your funds and earn a decent rate of interest on it, there are different types of accounts like fixed deposits and recurring deposits. As we all know that a fixed deposit account allows you to earn a fixed rate of interest for keeping a certain sum of money locked in for a given time. That is until the FD matured. FDs range between a maturity period of 7 days to 10 years. The rate of interest you earn on FDs will vary depending on the tenure of the FD. Yes, it is totally based upon the maturity period. Generally, you cannot withdraw money from an FD before it matures. Some banks offer a premature withdrawal facility, but in that case, the interest rate you earn is lower as compared to the regular FD rates. The fifth account is recurring deposit account. Now, recurring account means the account in which you are going to deposit a certain amount regularly. Now, as compared to fixed deposit, in fixed deposit, a person is going to maintain the deposit with bank at a single period of time. Means each and every month he is not going to deposit some amount to the bank. But in recurring account, the amount is specified, the amount is fixed by the person, and the time period is also fixed by the person who want to open this recurring account. Yes, let's discuss it. A recurring deposit has a fixed tenure. You need to invest a fixed sum of money in it regularly, every month or once a quarter, to earn interest. Unlike FDs, where you need to make a lump sum deposit, the sum you need to invest here is smaller and more frequent. You cannot change the tenure of the recurring deposit and the amount to be invested each month or quarter. We are not able to change the time period or we are not able to change the amount. Once which is fixed, it will fixed for the tenure. Even in the case of recurring deposit, individual face a penalty in a form of lower interest rate for premature withdrawal. The maturity period of an recurring deposit could range between 6 months to 10 years. And the last account is NRI account. As we all know that NRI means non-residents of India. The person who is not the resident of India, they are able to open account with our local bank. So that facility is given by bank to NRIs. There are different types of bank accounts for Indians or Indian origin people living overseas. Means the people who are living abroad, they are able to open account in India. These accounts are called overseas accounts. They include two types of saving accounts and fixed deposits. NRO or non-resident ordinary and NRE or non-resident external account. Banks also offer foreign currency non-resident fixed deposit accounts. So there are three types of NRI accounts. The first one is non-residents ordinary saving accounts or fixed deposits account. The second one is non-resident external saving accounts or fixed deposits account. And the last one is foreign currency non-resident accounts. So it's about the types of account. So that's all for today's session. I hope it is clear to everyone. Thank you so much.